All right, so if you've been following me and watching some of my videos, you've seen that when I look at the S&P 500 charts, I would use the SPY, the Spider Index, which tracks the S&P 500. But I will no longer be using that because if we look at SPY, SPY is not an accurate representation of the current price of the S&P 500. Currently, the SPY is at 643.70, but if I go to SPX, we have the actual price of $6,450.65. Now, the difference between the SPY and the SPX, this is the index itself. This is not a tradable security. This is not an ETF in any format. This is the actual index itself, and this is what everything else is based off of. S&P 500, the price of that, the movement of that is the benchmark. I used to use the SPY. I was using that up until today because it was something that I traded. So just using that chart, it was almost an exact match of the price movement of the S&P 500. And that's really what I was showing more than anything was the actual price action, price movement. But from here on out, I will just be using the actual index itself. So we're currently sitting right around 64.50. We are at the highest point of the range for today. Price is moving up. Today's price action stopped and is completely reversed to yesterday's losses. We've gotten almost half of the losses back between today's buy and sell alerts and previous day's sell and buy alerts. We've got a few to look at, so we'll just take a look at our first sell alert, which is KO. We have a continuation down from today from yesterday's triggers. We had two triggers yesterday. Price crossed below the fast moving average and the slow moving average. So we're going to set two sell orders. First one is going to be for 2 shares. I currently have 8. So I currently am maxed out on my 4 books with 2 shares each. So we're going to sell 2 shares. And the least expensive purchase price was $72.65. So from the 7 position within the tens place, 10% of 70 is 7. So we're going to add 7 cents to our purchase price, which was $72.65. So our sell order is going to be placed at $72.72. $72.72. Enter that. Good till cancel and extended hours. And our next sell order is going to be the same stock. Sell that. 2 shares as well. And the next purchase price, the next more expensive purchase price of Coke was at $73.08. So adding 7 cents to that is going to be $73.15. Good till cancel and extended hours. Confirm and send. So we've got 2 sell orders for Coke. It is extremely unlikely that we will have any type of price spike, that while it's on the way down, that it'll spike all the way up and capture these. But just in case of that extremely rare occurrence, they're there. So if they do sell while price is continuing down, then at least we'll have that money available to purchase other stocks that are in an upward trend. But more than likely, we'll be holding on to all of the Coke that I own for $8, or for 8 shares. And we'll be collecting a dividend on that while we hold them. All right, moving on to XLU, which is an ETF for utilities. So we had the fast moving average cross below the slow moving average yesterday. We have a price continuation down, being that it is lower than the fast moving average. However, from the lowest point reached around 84.73, we've moved back up almost 50 cents. I am not going to consider this a true continuation down, and consider this a true sell signal. It is a utilities ETF, and utilities are expected to do quite well over the next several years as we ramp up electricity use to cover the AI industry. According to all the experts, it's going to be a huge demand. So I don't want to just sell out of XLU right now with price moving up. It may continue up tomorrow, and then sometime next week we may actually have price move back across, and then we'll lose a little bit of the we'll lose some possible gains. We would miss out on that if I were to sell now. I would typically, once we have a fast moving average cross below our slow moving average, that is an indicator for me to try to sell all of the stocks if I can. If I can't sell all of them, like in this case, I've got 4 shares at $86, but I do have 3 other books, 4 shares each. So I've got 12 shares that I would be able to sell right now and be profitable on. We are currently in a downward trend, both on the price chart and on the MACD. We're on a strong downward trend here as well. However, we only need one day to turn around and go back in the upward direction. So I will wait and see who wins, bears or bulls, and we'll take a look at that tomorrow. So next is Meta. Oh, similar to XLU, we have price, fast moving average, cross below the slow moving average. We also have price moving back up. We do not have a continuation of our lows that were reached 3 days ago. Couple that with Meta being one of the leading AI companies investing and working to capitalize and monetize AI as best they can. They're hoping to be first. So this probably, my best guess is that this would probably continue up and it would end up something like this, where we'd just be, our fast moving average would be below our slow moving average just for a small period of time. So anything that I would have bought down here, if I sold out at this particular cross, I would have sold out somewhere around here. So let's just call it, I sold out at $700, but then I wouldn't have bought back in until around, somewhere around this area. So I would have lost $78 for 4 shares. For Meta, I have 4 books with 1 share each. That's how much I purchased for Meta. I'm thinking about bumping that up to 2 shares per book because it is such a strong company with a lot of investing into AI, and they've just been on a hell of a 3-year run, basically. So taking that into consideration, I'm not going to try to sell the 2 shares I currently have until we actually have a confirmation of price below this range here, right around the $733 range. So we'll hold on to that and we'll move on over to Moody's. That is MCO. So with Moody's, we had, just like the other stocks, we had fast moving average crossing below our slow moving average, at the same time having our price move down. We did have continuation. We were going down. However, today the price stock is going up in price and value. However, I only have 1 share and we already have a limit order. But if you currently have Moody's, you may want to consider possibly selling out of that or reducing your position, since we do have a cross of the fast moving average below the slow moving average. Again, this is my indicator to possibly sell completely out of the shares that I have. If you have a specific strategy that you already use, if you're already trading, when we do have a cross, if you're using the moving averages as indicators for your swing trading, if you are a swing trader, comment and let us know. All right, we've got one more stock to take a look at that hit our sell alerts, and that's the ETF XLP. XLP is Consumer Staples. That's an ETF. We had price move across our fast and slow moving averages yesterday. We clearly have a continuation down. However, the current price is lower than my purchase price. I purchased 12 shares at this cross, and I purchased them. So we had cross here on this candle, and I purchased them the next day at a price of $82.49. So price has moved well below. We'll just call it, round it up to $2. It's moved $2 past our purchase price. So we will set a sell order for 4 shares because not 4 shares, 3 shares. I have 4 books. Each book has 3, so I'm maxed out at 12 shares. So we're going to set a sell order for 6 shares. Price moving below both the fast moving average and the slow moving average are each individual triggers. So we're going to set a sell order for 6 shares. There's 6. And our current price, or our purchase price, was $82.49. Going to the position in the tens place, which is the 8. 10% of 80 is 8 cents. So we're going to add 8 cents to our 49. So that's 82.57. So 82.57 is our sell order price. Good till cancel, extended hours, confirm and send, and there's our sell order. Somehow I set it for 87.57. We don't want that. We want it at 82. Sell, let's try this again. We're selling 6 shares. We want 82.67. 82.67. 57, not 67. Backspace, 57. 82.57, good till cancel, extended. That looks right. And that looks much better. Shouldn't have been way up here. All right, the next 2 stocks we're going to look at, they go to earnings this afternoon, and both of them current prices are well below my purchase price. So we're going to look at MDB, which is, whoop, that is not MDB. We want MDB, which is MongoDB. MDB, when I'm maxed out with 4 books, they're 1 share each. I have 4. So we have 3 books at 1 share each. And when I go to earnings, I'd like to have at least half of the books rounding upward. So in this case, we're going to cancel only one of these orders. So we'll have 2 orders remaining. So we're going to cancel the highest priced order, which is $2.98. That cost us the most amount of money. So if by some strange, miraculous price action occurs, if this ends up going down and it spikes all the way up to capture these 2, that would be amazing, but it's extremely, extremely unlikely. But we've got them priced just in case. If price does move up and we get a price cross, then we'll just cancel these 2 orders because we'll have live price movement while our fast moving average is above our slow moving average. And I'm mistaken. We want to cancel 2 orders because I only want 1 order. I want to keep the other 2. So we're going to cancel this other $2.98. Now, this is accurate. We would only want to sell 1 if price spikes up on us and continues its downward move. I want to keep 2 books because I always want to err on the side of price moving upward. But there's just no way price is going to move. We bought it at 2. We're looking at 294, 291. It's just not going to be $80 move. And so this is all irrelevant. So we're going to do the same thing. Take a look at Okta. We're going to be canceling some shares just in case there's a huge spike up. So I own 2. And with Okta, with my 4 books, they're 1 share each. That would be 4. So I want to keep at least half of these 2. So we're going to cancel the highest price. And if this gets bad news and wants to continue down, but for some strange reason, if it moves up $135 and captures that before it turns back around, hey, then we'll have money sitting in the bank ready to purchase more stocks that are actually in an upward trend. But for now, we'll just hold on to these. So with those canceled, we will not be, and we don't collect a dividend on either one of these, either MongoDB or Okta, even though most of the other stocks I own are dividend paying stocks. This is just, we're just living through our lost opportunity. I don't really sell if price moves below our purchase price. I just hold on to these. And the reason I hold on to them is because for most of the stocks I own, they are dividend paying stocks. But my minimum investment for purchasing stocks is just 1/2 of 1% of my portfolio value. So it's not a huge loss. And that's everything on our sell list, either from the sell alerts today and our previous days. So we will now move on over to our buy list. All right, so we have over 10 to look at between the alerts today, which is about 6. Then we have yesterday's, the previous day, and even a day before that, on into last week of buy alerts that were triggered, but we did not buy because we did not have a continuation, or in some cases we just didn't have enough money. So let's go ahead. We're going to move on over to our buy list. First one we're going to look at is, we're going to look at IBKR first. IBKR, which is Interactive Brokers. So IBKR, the news was just released that Interactive Brokers is going to be added to the S&P 500, and typically, so that news was released yesterday, late yesterday afternoon, but typically what happens with companies, once they've been reported that they're actually going to join the S&P 500, price usually goes up for the short term after that inclusion into the S&P 500. And the reason is that ETFs and mutual funds that hold the index for the S&P 500, they're required to buy whatever stock enters into the S&P 500. So they can't buy the stock beforehand. Now, I don't know what rating, or excuse me, what weighting the Interactive Brokers will have in the S&P 500. But because mutual funds and ETFs and other indexes that use the S&P 500 as a weight or as the base of their fund or ETF, they are required to buy. So money will be going into IBKR. They are going in on Wednesday. Let me confirm that. I'm looking at Google now. IBKR entry into S&P. That is not happening till Thursday. So pre-market Thursday morning. So I will be maxing out my 4 books. Now, the way I'll calculate my 4 books, I usually purchase half of 1% of my portfolio value. So for stocks that are sitting right around $63, I would be purchasing 2 shares per book. So that would be 8. However, when I have a split, when a stock splits this close or within the last year, if we have a stock split, I actually max my purchases out according to the pre-split price. So using round numbers, we'll just say, we'll round this down to 60. That would be 240 compared to this stock split price was right around $52. We'll round that down to 50 for easy math. So we take the $50 price, multiply that by 4, which is 200. So I will be purchasing 4 shares per book, so 16 shares. So $200 for each book is an $800. So I'll be spending roughly $800 to max out my IBKR. Now, had I owned IBKR prior to the split, I would still be using this policy. This is a rule I have, that whenever we have a split, I do not reduce my shares to the new price. I keep purchasing my stocks at the pre-split price. I pretend like the stock split didn't happen. All right, so let's go ahead and we're going to pump this up to 16. Bump that there. We have 16 shares because 4 shares per book for 4 books is 16, and we're purchasing these at $63.13, and we got them at $63.13. Just saved 1 penny. Thought we were going to get it at $63.14. Now, in the 2.5 years that I've been trading, especially in the year that I've been using this particular strategy, I have not ever owned Interactive Brokers. Between Interactive Brokers and Robinhood, I chose to be a Robinhood owner. However, Interactive Brokers has roughly 3 million users. Robinhood has over 20 million users, but Interactive Brokers their profit margin is huge. With only having 3 million users, they make a great deal more profits than Robinhood. Where Robinhood chooses to have a consumer base of everyday people like you, people like me. Interactive Brokers caters to the very wealthy. So their profit margins, their profit margin just as a business is 68%. I mean, that's huge. So just like every other stock that I've seen since I've been trading that enters the S&P 500, their stock goes up shortly after entry. Now, most of them have turned around pretty quickly, so I'm looking to sell these within the next week or two after entry into the S&P 500. We'll see if it plays out like the other previous stocks that I've noticed. Now, this will be the first time doing this. I have not previously purchased stocks at the announcement of companies being entered into the S&P 500. This will be the first time attempting this strategy. I just looked at the data, and anecdotally, I've seen that is how price moves after entry, and I looked into it today to see why. And I found out it's because of the ETFs and funds and indexes they are required to purchase. So there will be money going into these stocks. Well, not these stocks. I was thinking about all the other stocks, but there will be money. There should be money going into interactive brokers. I hope it's a lot. Hope it drives the price up quite a bit. Now, if you are choosing to follow me and you are choosing to make some of these trades that I'm making, just know that this may not work out as I'm hoping it does. So if you make this trade, don't be mad at me. I'm not giving financial advice. I'm not a financial advisor. I'm just giving you my thoughts, my ideas, and showing you what I'm doing. And you can see that I bought 16 shares on that philosophy, on that idea of stocks going up for a short term anyway, after entry into the S&P 500. So let's move on to our next stock, which is Disney. So DIS. Disney, we have a cross. We'll count that 2 days ago. However, we do not have price continuation in the upward movement. So we are not going to be buying Disney. We're going to move on to the next stock, which is JP Morgan, which is JPM. JPM. There we go. What is happening? Too many clicks. JPM. Enter. There we go. We are out of that. All right, we had price cross. We'll just say we'll call it yesterday. This was after the close on 2 days ago. We have price continuation. How many shares? I have 1 share. Now for JP Morgan, for each book, I have 1 share. So we're going to purchase 3 additional shares at the current price of $297.98. And the next stock is Keys. And so Keys is Keys for Keysight Technology. There we go. Keysight Technologies. We had price move past, we'll call it yesterday afternoon. However, we do not have price continuation down. We had the fast moving cross, the slow moving average, which is a pretty good indicator. But you can see Keysight, even though we are in an upward trend for the last 3 months, it's very choppy. Very choppy. Now, if you've been following me and you've watched some of my previous videos, you know that for purposes of the video, these sales, these trades that I'm making are for my swing trading strategy. However, in this account, I also day trade. I am not a great day trader. I am profitable on it. I do not lose money on my day trades. You'll see at the end of the video, when you look at our my profits for the day, my realized gains, you'll see that I think I'm around $200, but I didn't sell a single stock in this video on my swing trading strategy. So all the money I've made today is just from my day trades. With that being said, what my point was going to be, as I get better at being a day trader, I would look to buy Keys. I would just wait until price is down here. I currently don't take those types of trades. I don't predict. I try not to predict. I treat my day trades similar to how I do my swing trades. I look for the cross, then I may or may not buy depending on various types of information and other time frame charts. But you can see how choppy it is. If I were to just wait until price comes down here, if it continues to stay choppy, then I can buy low and just wait until price comes back up and sell high, not dependent upon any type of moving average cross. I would just let price cross down, and then when it's gotten, let's say, $4 away from the slow moving average, I would buy, and then when it gets above $2 above the slow moving average, just sell, regardless of what the actual moving averages are doing. But I'm not that type of trader yet. And I'm not in any rush to be that kind of trader. Sometime next year, maybe I'll start looking into VWAP and putting that into place. But right now, I'm interested in showing you my swing trades, because my swing trades are trades that you can actually follow if you choose to do so. All right, next is PayPal, PYPL. This one's been in a downward trend for a month, since July 28th. Let's take a look at the earnings. We do have price, the fast moving average crossing the slow moving average, and we have a continuation of both price moving above the slow moving average the fast moving average, and the actual average is crossing. The earnings for PayPal We'll see the estimate by the analysts was $1.30. They were actually at $1.40, which that's not bad news. It's not great. I currently have 4 shares, which is 2 shares for 2 books. So PayPal's not a very strong candidate. We're going to go ahead and take a look. Since we do have quite a few on our charts, our triggers that have been activated and stocks from previous days to look at. So we might have some better options. For example, let's take a look at Ubiquity. Now, something like this. This is clearly in a strong upward trend. Last 3 months, slowly upward, even though we went down before earnings, which happens. A lot of traders, they'll sell before earnings, and then you can see what earnings happened, what occurred there. Nice price up. So Ubiquity. For Ubiquity, I max out with 4 books with 1 share each, which would actually put us over our $2,000. So I'm going to see what other options we have, because when I do buy stocks that cross, I like to max out. So we'll put that definitely on our possible list over PayPal. So Ubiquity is definitely one that if we don't buy anything else, we'll come back and we'll buy at least 3 shares of Ubiquity. But we want to compare them to other stocks. All right, so let's move on. Take a look at IWF, which is a ETF for the Russell 1000. So here we have price triggered 2 days ago as it crossed the fast moving average. We have continuation of that. We didn't have it yesterday, but we clearly have continuation today. However, I would rather have Ubiquity with such good move. IWF, we're looking at 1,000 companies here of, I believe, small caps. You know what? It's actually large cap, but it's 1,000 companies. So not every single company in this is going to be profitable. So they'll be pulling down the overall weight of the index. And with Ubiquity having such a strong move, we want to keep that as our favorite option right now. Well, let's take a look at Goldman Sachs. That's not bad. You know, Goldman Sachs is a pretty good stock. I might buy one of these and then put the rest of it in Ubiquity. So we'll just put Goldman Sachs on our list of possibilities. There's a lot to look at. I think we have at least 6 or 7 more to take a look at. And I'm seeing these for the first time today. So these videos, I'm not going through and organizing myself. You're seeing my process live. So let's take a look at the next one. And the next one is XTL. No, that's a good move there. So instead of, it's an ETF. That's for telecom, and this is going up basically mainly for, I believe, AT&T. This also is a great one. So I've only got $2,000. I'd really like to buy UI, but if we continue to have our next several stocks all going up in an upward trend, I might not get the UI, the Ubiquity, and just spread my money out through these. That is a big move through UI. So typically, if we go back to UI, when we have a move like this, it's quite possible that it might just stall out, and then I'll have a loss opportunity cost, and we'll have that loss there. So that's something to consider as well. But let's take a look at the next stock, and that's XLI. Look, we have cross and a continuation. All right, let's look at XYZ. That was square. We didn't buy that the other day. XYZ. And these are stocks that are selling from my day trading strategy. XYZ has got a decent cross. All right, we're moving on to Riot and see where they are. All right, I'm not going to be buying Riot because current price is down below, with this indicator, I only want to have at least 1 book, and that's what I've got. I've got 1 book. So next on the list that we're going to look at is QQQ. QQQ. This is QQQ is indexed to the NASDAQ, and if I felt so certain that NVIDIA was going to have a great earnings report tomorrow and price is going to go up, I would buy QQQ right now, but I'm not ready to make those types of predictions. I want to make as much money as I can and be as safe as possible. I'm not in a position where I want to gamble. That would be a gamble. just putting money in before the price moves. I like to wait right now and make my decisions on price action. So we're going to look at Marriott. That crossed yesterday. We had a price alert trigger yesterday, but we didn't buy. Actually, it was 2 days ago, and this was one reason we didn't buy. We had price continuation was a negative, and it just went in the opposite direction. So we're going to look at LNG. Another one we did not buy yesterday. So here we've got a good price action on quite a few stocks. So I'm going to add LNG to my list. And we're going to take a look at Disney. Or I think we already looked at Disney. And we did. So we're going to take a look at AppLovin, APP. Another one on the move. So a lot of these stocks from yesterday, they're on the move. And one reason they're on the move, we have quite a few analysts. Our current price, if we go back to quickly to SPX, we're at 64.62, and there's a lot of analysts that believe that we're going to hit 7,000 by the end of the year. So if you are in the markets and you're looking forward to that, then you should do well if it works out that way. If you're not in the markets, you might want to consider getting in. If the analysts are correct, then you would be you'd have a nice little gain on your hands if you were to enter the markets, and especially if you were to choose to possibly follow some of my trades. I believe since we have so many stocks that are actually in an upward trend, and Ubiquity has had such a great move from the earnings, there is something called earnings bias, that whichever direction the stock goes in earnings, for the short term, it tends to travel in that same direction. But anecdotally, I've found that when stocks have that big of a move, that it might stall out as well. So instead of taking that risk, I'm just going to go ahead and buy these lower value stocks, or not lower value, they just cost less, so more economical. So AppLovin, I currently have 6 shares, and for App, I like to have 12 when I'm maxed out. But I am not going to max out, and the reason I'm not is, if you've been following my videos, you know that when I come to earnings, I want to try to sell at least half of the books that I own. Try to sell at least half of the shares that I own. So I sold out of App half of my books, which is why I'm down to 6. I did have 12 back here, and I've had 6. We've made some gains, and I would really hate to get 6 more books and then price just drastically take a nosedive on us, and then I lose the gains from these other 6. So instead, I'm only going to buy 6 more. Excuse me, I'm only going to buy 3 more. So we're going to buy 3 more AppLovin, and we're going to hopefully we'll just buy market at 3 at market. I got it at 468.89. All right. Now the 6 shares I have of AppLovin, I got it. We'll just round it up to $440. So it really wouldn't take that big of a downward move. Here you can see it went from 470 to 445. So instead of buying, maxing out here, if it does take a big nosedive and continue down, I won't lose all of my profits. I'll capture most of the gain from the other 6 shares that I've been holding on to. So let's go back to LNG. We're just going to make these purchases of the stocks that we decided to pass on. And we're going to buy. So LNG, I currently have 4. So I'm maxed out currently with LNG. So I have stocks, and all those were purchased at $240.98. So I need to cross that off the list. All right, so let's go back to Goldman Sachs. And we're going to buy that. Let's see, I currently have 2 shares. We sold, I probably had 4 back here. We sold 2. We've got a small gain, so the same thing. I'm only going to buy 1 additional share to take me up to 3 shares. So there's 1. And we're going to try to get it at $7.49, which we did. So that takes care of Goldman Sachs. We're now down to $15. So we have spent everything that we have. And since I am trying to protect my gains that I have, I don't yet really add in to positions as they are in a very long upward trend. I'll keep my max, and then I have my rules. So if I go to earnings and price still continues to move up, I will not max back out unless we had a huge price gain. But Goldman Sachs, it's a bank, and if we have those the interest rate change and it's a downward trend change, a rate decrease in September, like Joseph Powell had intimated last week on Friday, which is why we had Goldman Sachs had a similar move to the S&P 500, along with 98% of the other stocks on last Friday. I'm pretty comfortable that Goldman Sachs is going to do great between now and September. And if we do get that rate decrease, Goldman Sachs is just going to be on a continual upward climb more than likely. So, but I like to be safe, and I have my strategy of making my decisions largely based on price action as opposed to guesses. Remember, if you choose to follow me, then you know and you can be certain that I'm making choices based on data and information as opposed to guessing. And you can continue to possibly continue to make profits while I'm making profits at the same time. So these are swing trades that I'm showing you. So if you were to buy Goldman Sachs today, it's likely that you'll be able to buy them tomorrow and within the next week or two. So if you don't catch my video on the day that I release them, take a look at them the next day. If it's a Friday, look at them on Monday, and that trade is still possibly a live trade. But we are finished for the day on both our buys and our sells. So we'll go back to SPX, see what the candle looks like today. So we did have a little bit more move. We did go up a little bit in price. We had recovered almost half of our losses yesterday, but now we've recovered all of them since we started trading, since we started this video. Again, if you're in the markets, you know how amazing the markets work and how it compounds your wealth. But if you're not in the markets, please continue watching my videos, and hopefully it will inspire you and give you confidence to enter the markets. All right, so let's take a look at what we did today, our activities. Our sell list, we did not sell anything. I did not sell anything through my swing trading strategy. Everything I sold is through day trading. We did place a sell order on Coke, the ETF XLP, MDB, which is MongoDB, and Okta, and we bought IBKR, which is Interactive Brokers. They're going to be added to the S&P 500 on Thursday morning. JP Morgan, AppLovin, and Goldman Sachs. These are the four that we bought today. So let's take a look at our actually results and our realized gains for today and our portfolio performance. We had a good day trading. We got $264.84, and all of these are in day trading activities. None of these, again, are in my swing trades. Our portfolio performance for this year to date in our new account, I am performing 0.01% better. Now, for the year to date on these same funds, when I transferred accounts, I kept all the same funds. So there's no less or there's no more money. We just transferred everything right on over. So that account, we were performing just shy of 6% better. So we're looking at what, 5.8% that currently to date I'm outperforming the S&P 500. So all of that is good news. We are done for the day.